It's a liquid asset and one of the world's most actively traded financial assets, with trading volume of over 130 billion US dollars a day.
Gold, it's a very unique asset class because it's driven by factors that's not related to each other. For example, jewelry demand, investment demand, demand from technology, and also central banks demand drives very, very strong interest into the gold market. I think the key for gold is that not only it's a very, very good hedge against rising inflations, but the fact that gold, it's a proven diversifier. So if we look back, the historical data, the past 50 years, gold has had very low correlations to stocks and bonds.
I think it is certainly one of the more appealing safe haven assets right now, because if you look at this, the performance of most of the popular investment tools in the market, for the past half a year, stocks have dropped over 20% from a year to date, and fixed income market is having a really bad time right now. But if you look at gold, just to run through how it performed, we started the year at 1,008 at the current level. We went to a high of 2,050 thereabouts. We came back. Right now, we are back to the year start. So, I mean, if you look at the performance-wise, it already speaks for itself. Like, we are flat on the year, given how much has happened in the last 6 months or so. So, I would have to agree that, I mean, this is one of the more safe haven, at least the downside risk is not as big as some of the other assets.
But as with all investments, there is no guarantee that the price will rise. While volatile economic and political conditions tend to support the prices of gold, gains have been checked because of a combination of other factors.
If we remember where we started the year, market was just only entertaining maybe just a couple of rate hikes, maybe 100 basis point of rate hikes for the entire year. And look what have the Fed done in just the span of the last couple of months. We have went from 0 to right now just under 2%, and we are going further to even 4% by the first quarter of next year. So interest rate itself is already a big headwind for gold investors. And the other headwind for gold that caused it not to rise as much as anticipated is that of the dollar. So dollar has also benefited from higher interest rate expectation from the Fed. So that itself put a certain amount of weight on the gold.
I think the main reason is it's those interest rate headwinds and this tug of war between interest rates and inflation that's means that institutional interest in gold is a little bit more subdued. We don't just have a geopolitical crisis at the moment. We've also got very, very unusual, certainly if you look at the last 10, 15 years, a very unusual macroeconomic situation. So there are other dynamics at play that have had an impact on interest in gold.
With the opposing pulls on the price of gold coming from the US Federal Reserve's interest rate hikes and the war in Ukraine, where is gold headed this time?
Gold price has been flat this year, but if you look at the relative performance of gold, it's actually beating a lot other asset classes like bonds and stocks. From a demand perspective, we see quite healthy demand into the gold market, especially very, very strong inflows into gold-backed ETFs globally.
Well, we look at gold as a possible safe haven asset. We do take note that in the near term, there could be some volatility or at least some headwinds for gold. And we identified 2 key headwinds. One of them is the rising interest rates. On itself, typically it makes gold relatively unattractive because gold doesn't pay interest. So, and the other headwind for gold investors in the near term would be a higher US dollar. As usual, there's this relationship between the negative relationship between gold and US dollar. So, but looking past the near-term volatility or uncertainty, we do maintain a positive outlook for gold. We are looking at about 1,009 for the third quarter and eventually 2,000 by the end of the year.